just finish it up. All in all, pretty good. I'm gonna go get a beer and give you my thoughts on what I learned from today. Got my notes. This is what I took away from today. The first part of today was really good. Really educational. If you don't know anything about Bitcoin, you don't know anything about crypto, really gave you some education on what these is. So basically, cryptocurrency is a digital currency that is monitored and it is tracked on the blockchain. And if you don't know what the blockchain is, very simply, think of it like a public ledger that discloses every transaction, every transfer that's ever taken place. Why I like it, it is not controlled by a government. It is decentralized. Governments can print money whenever they like. Whenever they do, that makes your money less valuable. So cryptocurrency that's not controlled by a central government, that's one aspect I really like about it. Can't be controlled, can't be deflated by governments. So the first session today was really informative in explaining what crypto is, how it works, those sorts of things. There's some things I didn't know you could do with crypto. I didn't know you could loan your crypto to others and earn interest, similar to how loans work. And the blockchain is starting to become a more popular technology in owning assets. For example, say you wanted to buy a house, it would take you months, weeks if not months, to go through all the paperwork to buy the house. Now what tokenization and what the blockchain is doing is creating tokens or securitization over that asset. So instead of buying a whole house, you might be able to buy 1 or 2 digital tokens that represent your fractional ownership in that house. So there's lots of developments happening in the cryptocurrency and the blockchain space. So I learned a little bit in that first session. It was really good. Second session, so this was a free event that I went today. It was a free ticket hosted by a crypto company. So the second session was obviously the hard sell. They have a trading platform, they have a course, a program that they're selling, and the hard sell came out in that platform. But in the scope of today, it was fairly balanced. I knew that was coming, so that was not too bad. And then the last session was really interesting. They brought in some crypto traders to talk about some of their trading strategies for cryptocurrency. And I noticed there were some common themes that these particular traders use that I use in my investing. I think that's really important, and it really goes to show good investing principles are universal. They apply across asset classes, they apply across investing strategies. Thank you. Chippies. So some of the common themes, some of the common strategies that some of these traders were talking about was similar to what we do for value investing. And a great quote by Warren Buffett: be greedy when others are fearful, and be fearful when others are greedy. So what that means is when stock markets are dropping, when stock markets are at all-time lows, perhaps similar to cryptocurrency, that is not a time to panic. That is not a time to worry. That is a buying opportunity. You're able to buy assets at a cheaper price. So you're being greedy when others are fearful, i.e. when others are panicking. And I wasn't really expecting that to come out of these crypto traders. I wasn't really expecting that to be a strategy that they were proposing, but they did. So it was really good to see that some investing principles are universal. And one thing I took away from today, which I didn't know before, was this thing called the VIX industry, VIX, VIX indicator. And it's basically a measure of what level of fear, what level of volatility is in the US stock market. So a higher VIX level indicates a stronger level of fear, a stronger level of uncertainty, a stronger level of volatility, and a lower VIX number normally means more stability. So these crypto traders use that VIX indicator in determining when they're going to buy and sell crypto. But I didn't even know that existed, so I'm going to use that as well in my investing. Remember, being greedy when others are fearful, and fearful when others are greedy. And I was really interested to see the types of people at this event. I wasn't sure if it was going to be mostly young people, mostly old people, or what it would be. Now, I'd say there's actually probably a bit of a balance. There were some young people, which you'll see in some of the interviews that I did today. But there was a surprisingly amount of older people, which I was really happy to see. To me, that means they're going out and trying to learn. They're going out and trying to self-educate around a new financial system, a new financial product that wasn't always present, wasn't always available to them when they were younger. So I was surprised to see older people there, and I was really happy to see it as well. They're taking an interest in their learning and their financial education. And one of my biggest skepticism, my biggest reasons for being hesitant with cryptocurrency are these meme coins, are these shit coins that go up really high and then get the rug pulled and they dropped and people lose a lot of money. These meme coins, these fart coins, all these stupid things. But the common messaging from the people that were running this crypto conference today as well as the people I was interviewing, was stay away from the meme coins. And that's been my messaging as well. Stay away from these shit meme coins. The consensus seemed to be stay with these more reputable coins, stay with these more mainstream coins. And if you think about that logically, if you're going to go and invest in a company, or if you're going to go and work and partner with a business, you want that business to have a good track record. You don't want to take unnecessary risks on dodgy businesses. That same philosophy applies to crypto. So all in all, I'd say a pretty productive day.